The Nasdaq closed higher for the fifth straight session yesterday, its longest winning streak in 3 months. Good news there. Tech stocks helping to drive the buying, but Morgan Stanley says it's time to sell the tech sector, and Bank of America says investors should short the FANG stocks. Facebook, Apple, Amazon, Netflix, Google. You know these stocks because they are so widely held. They're probably in your portfolio. We're bringing in Joe Soroka, Chief Investment Officer at Nova Point Capital right now to help us out. Joe, great to see you. So let's start right there. How many hedge fund managers, how many money managers have lost their jobs by making this very call that it's time to sell tech? Is the time right now to get out of FANG?
I don't think it's time to get out. I think it's time to get more selective. We've been more selective all year. The sector's outperformed. It had high expectations going into earnings. And as you saw in the earnings season, there were haves and there were have-nots. And the haves outperformed and the have-nots have given up a lot of ground.
Well, I think you make a really good point there because everybody talks about them like they're the same business, all the same companies doing the same thing. Absolutely not true. But what is true is that tech has a huge weighting in the S&P 500 index, 26%. So such a big part of that index. Let's dig into some individual names. You're seeing them on your screen right now. I want to start with Apple, which made headlines last week by bouncing right through that $1 trillion market cap mark. Bulls, unlike Morgan Stanley, Bank of America, bulls say, hey, look, this is a company with an incredible services sector revenue. They make something like a margin of 60% on businesses like the App Store, music, streaming. And you know what? They're not that expensive, trading at 15.8 times next year earnings. Is Apple a buy here?
Yes, Apple's a buy, and we own Apple in our investment strategy. It's a real good example of a company with a large user base, but they're able to monetize that user base directly. Whereas I think Facebook's the opposite. They have a large user base, and they struggle to find ways to monetize that user base.
Well, let's get to Facebook then. You brought it up. Now, here is a company that has been in the crosshairs of regulators, right? And we hear this story now. The stock was actually up on this news that they want to do business with the major banks to put your personal account information on your news feed. I guess allow you to access your personal financial information through Facebook. A lot of people are going to be upset about this. Is this stock done, or should you buy it?
It's not a stock that we own, and it's not a stock that we plan to own. But hey, that's the innovation of Silicon Valley. You get knocked around on Cambridge Analytica, you get knocked around on a bad quarterly earnings, but keep pushing forward and keep finding new ways to do business.
All right, I'm going to get you to Amazon. I'm ramming through all these tech stocks. You know, this is a company whose stock trades at about 1,800 and change, right? Like, if you want to buy a decent-sized stake of Amazon stock, you basically have to take out a second mortgage. Is this a company, though, that can continue to pile on earnings gains? They had an incredibly impressive quarterly performance.
I mean, it's a company that didn't have earnings for a long time because they were consistently reinvesting in the business. Now that they start to have earnings, there's going to be expectations on those earnings. Not a stock we own, but I'll tell you, it's a unique animal. It's in the grocery business.
Right.
It's in the department store business. It's in the web services business. They're doing a lot of interesting things, just not a stock that we own at this time.
Very interesting. And I just want to mention quickly before we leave this that Morgan Stanley is making their call on tech because they think that it's possible that there's going to be a rotation, especially coming this fall with interest rates rising, Fed clamping down. So we'll see what happens, right? So that full screen. If we're right and tech gets its turn in the volatility roller coaster, its market weighting, crowded positioning, and overweight and growth and momentum strategies mean the pain will likely spread beyond tech. So that's what they're saying. Joe Soroka, thanks for coming on today and helping us out with this segment. We appreciate your time early this morning. Thank you.
Absolutely, Jerry. Have a great day.
You as well.